automatic data processing stock, ticker symbol ADP. This stock is up 8% year to date, slightly underperforming the S&P 500. Looking at the earnings, we see some good results with a beat on EPS and revenue. However, for the upcoming earnings, all analysts expect a miss. People love ADP stock because of multiple reasons, one of the things being the dividend, and I understand why with dividend yield at 2.2%. And look at the dividend growth, 25 years of dividend increases at a really high rate in the past 5 years. If we look at the 5-year total returns, we see that ADP underperformed the S&P 500 with a decent amount. And this is including dividends. So, could this be the perfect time to buy ADP stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does ADP do? ADP is a provider of payroll and human capital management solutions, servicing the full scope of businesses from micro to global enterprises. Diving into the earnings presentation, we see that total revenue was up 7% year over year. Adjusted EBIT is up 12% year over year. The EBIT margin increased 140 bps, which is really good. The EPS was reported at $2.88, up 14% year over year. Looking at the employee service segment, we see that revenue is up 8% and the margin increased 230 bps, both looking rock solid to me. They also revised the full year of 2024 outlook for this segment, with higher margin increases. Looking at the PEO service segment, we see that revenue went up 5%, which is a little on the average, but still nice. However, the margins decreased 220 bps, which is something that concerns me a little bit. They also expect margins to fall down even more in the full year outlook. In general, ADP expects 6 to 7% revenue growth, which is very nice. On top of that, EPS is expected to grow in a range of 10 to 12%. A few other impressive numbers are that they are having 1 million clients worldwide, and 1 in 6 US workers are paid. They also have AA credit ratings and 49 years of dividend increases, all very impressive. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. ADP is a 103 billion market cap company. PE ratio is at 28, indicating they are overvalued. Later in this video I will show you my 3 price targets for ADP stock, so make sure to watch until the end. Revenue is at almost 19 billion and in this graph we see that revenue went up in the long run. It has to be said that this looks really steady and consistent to me. Margins are increasing in the long run, and to me this is looking really good. To me this is a really good sign. EPS is pretty much the same story as the revenue and margins. It is growing pretty steady and consistent over a longer period of time. Analysts expect that EPS is going to grow at roughly 9% on average, but it has to be said that they expect EPS to slow down a little bit in the coming years. For the revenue, analysts expect pretty much the same, starting at 7% growth in 2024, but after that they expect revenue growth to slow down just a little bit. Return on assets is sitting at 7%, which is a decent number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at roughly 42%, which is an insane number. It is also higher versus the 5-year average, which is also a good sign. Current ratio is at 1, which is a great number. It is also pretty good historically. So this looks good to me as well. Right now ADP has 3.4 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. ADP has 3.3 billion in total cash, so they can't pay down almost all of their debt at once. To me, this looks really good. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run at a steady and consistent pace. Shares outstanding are decreasing over a longer period of time. To me, this looks really good. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 2.2%, which is a great number. Annual payout is at $5.6 and payout ratio is at 59%. I prefer 50% or lower, so right now they have 41% left in cash to buy back shares, pay down debt, do acquisitions and all other things. And now it gets really interesting. The 5-year growth rate is at 12%, which is a great number. And they have increased the dividends for 25 years in a row, which is really impressive. And if you take a look at these numbers, the dividends paid since 2012, you see that ADP did increase the dividends at a high pace historically. And they are picking up pace again in the most recent years. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that historically it looked really steady. However, I would love to see a percentage under the 50% here. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation that can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a decent pace from here. And overall these dividends look really good to me. But how about the historical returns? I decided to compare ADP stock with the overall market, in this case the S&P 500. On the 5-year chart we see that ADP returned 73%. And keep in mind this is including dividends. The S&P 500 returned 101% in total. So ADP underperformed the S&P 500 on the 5-year chart. On the 1-year chart we see that things are pretty much the same, with the S&P 500 sitting at almost 30% return, while ADP is sitting at almost 21% return. On the 6-month chart it is again the S&P 500 that is having the highest return here with 18%, versus ADP sitting at 11%. On the 1-month chart it is again the S&P 500 having the highest return here. So bottom line, the S&P 500 was in all 4 scenarios the better investment. But could this be the perfect time to buy ADP stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets. Starting off with revenue growth. For the revenue growth I'm filling in 6, 7 and 8%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 19, 21 and 23%. For the free cash flow margin I'm putting in slightly lower numbers. For the PE ratio I'm putting in 20, 22.5 and 25. For the price to free cash flow I'm putting in the same numbers. They have a moat in some areas in my opinion, but I don't want to overpay for the current growth. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now ADP stock is at $252. I hit analyze and we only see one green number. We have a low price target of $138 to $155. We have a mid price target of $180 to $199 and we have a high price target of $231 to $253. To me, the high price target is the most justified here, telling me that this stock is still overvalued. Which price target do you think is the most justified? Let me know in the comments down below. My final conclusion on ADP is that I really love the company. They have a mode in my opinion, especially with the growth in margins. But the stock still looks overvalued. Most fundamentals look really good, and as mentioned before, dividends are also looking really interesting. The yield itself is at a decent number, but the growth numbers are pretty impressive. And the growth is increasing again. And as said a second ago, the valuation is where the problem is right now for me. I'm skipping this stock and I'm waiting for the stock price to come down before I open a position. In the meantime, I keep following this company, since I do think they are doing an amazing job. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.